Hey gang, this is Mike with my Real Estate Dojo, and I'm going to show you today how the average person, just like yourself, you can buy a home without going and you getting a loan from a bank, without using your own credit. Now, I know that's shocking. Trust me, when I found out, I was exactly shocked too. But let me explain this to make sure you understand it. I'm going to show you right now how you could buy a house without using your own credit, how to buy your own home that you want to live in, not an investment property, a property that you want to live in without, even if you have poor credit, okay? And by using other people's money, in a nutshell, taking over somebody's loan payments. Now, when I found out about this, I was very shocked. I've been in the real estate business for quite a while now, and I love buying properties called subject to. Now, in this video, I'm going to break it up into multiple sections. I'm going to talk about what is it subject to. Then I'm going to talk about the benefits of using this technique to buy your own home that you're going to live in yourself without going to the traditional way, which is basically getting a loan, hiring a realtor, and then paying all the fees that associated with all the junk fees like getting a loan, okay, and all the sweat you have to deal with getting a loan and all the risk of getting a loan, like putting your name up and your credit up and etc. I'm going to talk about the cons of using this creative financing, what we call subject to. And then I'm going to talk about, is this legal, and give you in-depth information. And I'm also going to talk about how to find these deals, because these are the diamonds. They're not just laying out there. And I'm going to show you exactly what you need to do to go out there and target and market these individual sellers so you get the deal. If it's for your own personal home, if it's for yourself or for investment property, or it could be for example, if you're grandparents or older, you have kids that are older, they're going to college, you can use this technique instead of paying rent for them or a dorm to buy an income producing asset, put your kid in there, and then rent out the other rooms, and then have your kid live for free, and then you also build equity. So it's a great way to get into real estate without using your own credit, without getting a loan from the bank. So I'm going to talk about a lot of different things, okay? For example, is it legal? How to find the deals, the cons, what are the two options to get into this if you want to go this route. So let me go ahead and pull the curtains in, because it's going to be kind of a detailed video. So let's dive in. What is it subject to? And how can an average homeowner or somebody that lives in an apartment or a rental property, how can they use this strategy to buy a property for themselves? So let me define what a subject to is. A subject to is a creative financing where a seller will sell you his home, let you take over the house payments without you going and getting a loan from the bank. Yep, you heard me right. A seller has already qualified for a loan. They may have lived in the home for a couple of years, 10, 20 years, it doesn't matter. And at some point in their life, they become what we call a motivated seller, and they want to sell their home, and they, for some reason, they don't want to sell traditionally with the realtor, or they can't for whatever reason, and they're willing to do creative financing, which is in this case a subject to, where you step into the seller's shoes and you just start making monthly payments on the property. So again, let me define subject to. Subject to is a situation where you buy a property without coming up with the cash, without getting a loan. All you do is use the seller's underlying existing mortgage or underlying loan. And all you do is just start making payments. And you own the property 100%. So it's just like a traditional transaction that happens whenever you are living in an apartment and you want to buy a home, and you go to a mortgage broker or to a bank and you get a loan, and then you hire a realtor, and then that realtor will finance your home. Everything's exactly the same besides one thing. That one thing is that you're not using your Social Security, you're not using your credit. So it doesn't matter if you have good credit or bad credit, it doesn't matter. You're not using that information. And you're able to ascertain a real estate property, and it could be an income producing real estate property, and which creates you wealth and cash flow. And I'm going to talk to you about some of the benefits right now. So now that you know what a subject to is, what are the benefits? Why should you, as a homeowner, why should you overpass the traditional path and go against the grain? Because you're going to benefit so much. Let me run down through a list of benefits, okay? Number one, when you buy this property subject to an existing mortgage, it's just like a traditional transaction. You get to own the property 100%, guys. You own it after closing day. There's no buts, ifs about it. In the name of the law, in the name of the worldwide, everybody knows you own the property because you get the deed in your name, guys, okay? Number two, you don't have to use your Social Security. So if normally you want to go get a loan from, let's say, a bank, and you want to buy a property, you have to get pre-approved, you have to jump through all these hoops, you have to pay all these fucking fees, closing fees, all this junk fees, okay? You don't have to do all that because some other seller had already paid all that junk fees and jumped through all these hoops, and all you're doing is just taking over their payments, okay, guys? And I know some of you guys are thinking, well, why would a seller sell me his property like that? And I'll get into it after the benefits, okay? That's a very, very good question. I like the smart ones that ask questions like that, okay? So coming back to the story of the benefits of buying property subject to for your own home to live in, we talked about how you don't have to use your own credit. You own the property 100%. Now, the next point I want to talk about is very, very important. I want you to pay attention, especially if you're a first-time home buyer. And that is that when you buy a home from a bank, the bank does what's called amortization. And what that means is for the first few years, 10 years and before, first 3, 4, 7, 8, 9, 10, all the payments, the majority of the payments that you pay are going to go towards the interest, not the principal reduction. And so what that means is, for example, let's say if you have $1,000 coming in, out of that $1,000, this much is going to go for interest, this much is going to go for principal. Okay, let that sink in. And that's why, when you borrow a home, a loan to buy a home for $100,000, it takes 30 years to pay for it, because if you do the math without amortization, it should be paid off very quick. An average home that you borrow for $100,000 depends on the interest rate, of course, but if you just amortize it, you're paying 3 or 4 times that, if not 5 times that. For example, a $100,000 home, by the time you pay amortization, you're paying like $485 or something, okay? Depends what the interest rate is. But so that's a very important rule that to remember, that when you buy a house subject to, you're benefiting from that amortization, because that original seller had bought the property. Let's say they lived in the property for 5 years, or if they lived in the property for 15 years. So if they lived in the property for 15 years, for all those first 15 years, they've been paying the interest. Now, after that 15 years, now the majority of the payments that you're going to take over, because that's how you bought it, you're going to make the payments, and it's going to go majority to principal reduction and this much to interest, because that other seller had paid this much to interest and this much to principal reduction. Now it's going to be an inverse, and you get to ride the benefit of that. And it's so crucial, because now every month that you or your renter or whatever you structure the deal, whatever you need it for, because I buy these properties for my investment, you could buy for your own personal home. But however you structure it, every month that the renter is paying for it or you're paying for it, you're getting more of the principal reduction, which means more equity for you. Where that seller originally, poor guy, man, he was paying mostly interest. Okay, so that's point number 3, which is very, very crucial, guys. Okay, now I want to talk about qualifying for a loan, because being in the business for such a long time is just very crazy. Because when you go get a loan, let's say with a bank, the guy says, I'm going to give you 5% interest rate. And man, I see this all the time. I own a real estate brokerage called Plug-in Realty. Guys, if you need a broker, shout out. And I own an investment business, so I see that all the time. Somebody gets the loan, they say they're going to get 5% interest. By the time the 30 days or 40 days before the closing happens, the interest rate increases. For some reason, the lender wants another point or another whatever. It's never ever it's the same. It's like such a shady business in my mind. For whatever reason, the interest is always goes up, dude. You know what I'm saying? And when you go get a loan, those fucking banks make it seem like they're doing you a favor. But they darn well know that if people don't borrow, this whole fiat system that we have for economy, which is not backed by gold, it's not going to work. They're not going to make any money. So they're not doing you a favor for lending you money. They need you to borrow money for them to make money, because if people are not borrowing from the banks, they don't make any fucking money. So I'm not trying to go into that subject, but coming back to this, when you go, my other point number 4 is when you go borrow money from a bank, A, they make you feel like shit. B, they make you feel like they're doing you a favor. Okay? And then 3, which is very important, whatever they tell you, they're always going to lie, because at the end of it, they have you going through this roller coaster and you're very, very excited. And the very before you sign, say, hey, we need another point, which is going to cost you thousands of dollars. And you're already like told your friends and family, and you're so excited, you bought new furniture. So what are you going to say? Yes, you're willing to pay that. And will they sucker you for another thousands of hundreds of dollars throughout that 30-year amortization period, guys? So this point number 4, which you don't have to deal with the bank's bullshit, is so crucial. And if you want to get a house, you don't have to fucking qualify. You don't have to dance to the tune they're saying, okay, guys? Now, I want to put this warning out there, guys. I don't want you to go out there and if you have no business buying properties, if you have no money to make the monthly payments, I don't want you to go out there and buy properties like this. This is for only people that don't want to fucking go traditionally like the herd. These are the people that have the money. Like if you have 20 grand and you want to put 20% down on a property, why not just spend the technique I'm showing you, 3 grand, and get the property, have a non-recourse loan, which I'll explain a little bit later. You didn't have to get your credit, you close very quickly, all that stuff, okay? And save the remaining money instead of paying all these junk fees for title companies and, surveys, because that seller has already done it. Which brings me to some other points, guys, is that when you get this loan, you don't have to pay all these junk fees. Like, for example, you don't have to pay a survey. You don't have to buy a title company. If you want to, you can, but you have the option not to. You have freedom. I personally don't. Okay, when I buy a house, I'll pay the title company $150 to run title search. And dude, like the guy bought a cookie cutter house in the neighborhood. He's the second owner. It was a brand new home. He's the second owner. I look at the deed, it's clean. Why am I going to pay the title company, buy title policy, and spend $2 or $3 grand, on a $200,000 home or $150,000? It doesn't make any sense. This other guy just bought it. I could look in there and know that there's no encumbrance or any clouds or any judgments or anything like that. So I know, hey, why should I pay again for the company to make money, dude? It's already in place, okay? So it gives you a lot of option in the how much money you want to spend, what options you want to do, how fast you want to close. Where if you go with the traditional bank, you're not going to be able to do that because you have to go through their customary qualifying for a loan, let me fuck you in your ass type of shit. Excuse my language, but as you know, I'm not really fond of banks. So why don't we help sellers? Is what I'm trying to teach you, is help sellers. They're motivated sellers. Take over their payments, save them. They've already done all the dancing for the banks to qualify, and you don't have to pay all those closing fees, title policy if you choose not to, survey, all the fucking notary fee, prepping of this doc, all those things they come up with. And at the same time, you don't have to pay all the fees that you have to do to the loan originator. If it was like Bank of America or a mortgage broker, all that bullshit they're fucking charging you. You know what I'm saying? And you get the control and you have the choice instead of the other way where you're like, hey, whatever you want, I'll do it. But if I want to get a house, I got to do exactly what you say. Your hands is up. This is what you have choices, dude. Okay, which is so powerful. Okay, now, so we talked about not paying all those junk fees. We talked about how you don't have to qualify for a loan. We talked about how the thing is not on your social, so it doesn't matter if you have good credit or bad credit, guys. We talked about how you own the property, guys. I want to make sure I don't miss anything, okay? Here's a very important thing, okay? A non-recourse loan. When you buy these properties, I teach you to negotiate a non-recourse loan. And what that means is that when you go to borrow money from a bank, let's say Bank of America, for a home, you have to sign what's called a personal promissory note, which basically says that you're going to pay this house for this much, and this interest rates for this terms, and the monthly payments, etc. But more importantly, it says that, hey, if you fuck up, if you default, we're going to come not only take the property, but also hurt your credit. And the way they enforce taking your property, they do it through this paperwork called deed of trust, okay, what I call DOT, which basically you sign your rights to the bank in case if you default, they could take your property. So when you go to a traditional closing, you go to let's say mortgage broker or Bank of America, they give you a loan. Once the loan is ready, at closing, what happens is you got to do three things in a nutshell. Is a new note is created, which is that promissory note. You're gonna sign a deed of trust, which basically is a collateral instrument that you pledge to the bank that if you default, if you don't make the payments, the bank can take the property away from you. Okay, and then the bank's gonna give you the deed, which is the ownership. So those three things happen at closing on a traditional way. Now, this way, the same exact thing happens. The only thing is that you don't have to go to the bank. The seller has already gone to the bank, done all that stuff. You're gonna have a new closing for you to be the rightful owner of the property and all the responsibilities and liabilities that come with ownership of a property, but you don't have to qualify for that loan. But more importantly, the non-recourse happens at the second closing with the seller, because the way I teach you is when you negotiate with the seller, instead of the deed of trust, the deed and the note, with the seller, what we're going to do is we're going to create a new note that's a non-recourse, which basically says, hey, Mr. Seller, I'm going to buy your property. If I default, I'm going to give you the property back. You can take it through a foreclosure because you're going to sign a deed of trust to him. But however, Mr. Seller, you're not going to come after me personally. You're not going to come after my credit. You're only going to take the collateral. Or if you go with the Bank of America or the traditional way, if you default, if you don't make the payments to the bank, what they're going to do is they're going to take the property, they're going to come and ruin your credit and sue you and all that good stuff. Where here, you already negotiate. I teach you how to negotiate, where you tell the seller, hey, if I default, you can take the property just like Bank of America does. However, you're not going to ruin my credit. You're not going to come after me. You can only take the collateral, and that's it. And that's a very powerful benefit, I believe, in my mind, that buying property subject to provides for homeowners or first-time homeowners or anybody that wants to buy another home besides going to the traditional way, guys. It's so powerful. I just want to make sure I hit up all the notes because, it's Saturday night. It's pretty late. I've been working all day, and now I'm doing these videos, and I just quickly jotted down because this is going to be a pretty intense, lot of information video. So 1 second, guys. So we talked about the amortization, we talked about the non-recourse, and it's really fast. There's no extra junk fees. You don't have to qualify. I think I hit all the stuff. Okay. Now, let's talk about some of the disadvantages. Okay, but before I do that, earlier, some of you guys had a question while saying, well, Mike, why would the seller sell you the house like this? And that's a really, really good question, guys. Now, I want to be honest with you. Not everybody's going to sell their home like this, guys, okay? Maybe about 7 to 10%, okay? 90%, 97% of all home sellers in America, they sell with a realtor. The remaining, okay? The people that try to sell with a realtor that couldn't, those are the people. Or the people that are in a motivated character situations, and I have a video that explains where you have to go to fish with those kind of people, guys. So I'll tell you in a little bit. Now, let me answer this question for you because it's a very crucial question. Who out of their right mind would sell you their home without letting you take over their payments, guys? And the answer to that question is what we call motivated sellers. A motivated seller is somebody that must sell their home. Motivated seller, let me give you some examples. It could be somebody that's going through a divorce and they don't want to deal with the property or they can't afford it financially. Somebody that has a death in the family, for example, a husband and wife, the husband dies, the wife can't make the payments no more. A job relocation, like for example, they live in Texas, they're a fucking GM of, general manager of Home Depot. Home Depot transferred them here a couple of years ago, now they're transferred to a different place. See, things of that nature. There's so many variation of what's called motivated sellers, guys. Now, there's two types of motivation, okay? There's what I call financial motivation and emotional motivation. Financial motivation could be, hey, I'm behind on my payments 4 months. I'm going through a divorce, or I lost my job, I got a paycheck cut and I can't make the payments. That's financial motivation. Emotional motivation can be that, hey, I got a lot of money in the bank, I'm really busy, I don't want to deal with this crap no more. Or emotional motivation can be like, hey, I have money in the bank, I just had lost a family member, I don't want to deal with this property, I don't want to go inside the home and deal with all that crap, I'm just ready to sell it and you guys take the junk, whatever you want to do. Emotional motivation could be somebody going to a breakup, or there's death in the family, or some traumatic thing that's happened to them and they don't want to deal with the responsibilities, and that's what we call emotional motivation. Well, financial motivation is just regarding money. Now, there could be a hybrid, okay, what I call a hybrid, and a hybrid is it could be financially motivated and emotionally motivated, or they could be one, financially only, or they could just be emotionally only. They have a lot of money, okay? There's people I've met that have a lot of money and they want to deal with that whatever reason, okay? So, to answer you guys' question, we're not just dealing with anybody. We're not trying to convince people, okay? There's a strategy applied to finding these people, and what we do is I have specific ideas for you guys on my YouTube channel. If you're not already subscribed, get on there. I have 42 ways to find motivated sellers for free. You could do that. I have paperwork you can do. I have strategies you guys can follow. But in a nutshell, why do sellers sell their properties with these creative financing? They're just motivated sellers, and I'm going to show you how to talk to them over the phone. Everything, guys, on my YouTube channel. I actually got a script called a seller phone script. You guys don't have that. You need that, okay? It's $50, really cheap. If you can't afford $50, guys, you're not going to be able to go out there and do these deals, because you need this shit, because it helps you negotiate owner financing. It helps you determine the seller's motivation. It has all the information there for you to be able to make a fucking offer. I mean, everything you need, you definitely need that. So make sure you get that, guys. So don't screw yourself out of $50. I only go the extra mile, guys, and from my videos, okay? So now that I talked about why would the seller sell like this, and who are these sellers that are willing to sell through creative financing, where you don't have to get a loan from the bank, you don't have to put all the money from the bank, you don't have to bank the bank, you don't have to feel like shit dealing with the bank, you can close whenever you want. You have the freedom to have options. We do whatever the fuck you want to do, instead of somebody telling you, holding your fucking hand like you're in fucking school, okay? Man, there's a lot of stuff. 1 second, guys. Now, let's talk about some of the cons, okay? Now, in my mind, life, there's always risk, guys. There's nothing you could not have risk. Even we live in a concrete city, concrete bubble, there's still risk, because Mother Nature has risk. You can't eliminate nature out of risk. That said, I think this idea has so little risk and so much benefits, okay? I'm a refugee American, and I think that, the risk is this much, the benefit is this much, guys. So it's a very, very benefit. But let me explain some of the risks to you guys. One of the number one risks is what we call due on sell clause. And the due on sell clause is basically a clause they put on the DOT, the deed of trust, what we talked about earlier, where you sign to the bank your house as collateral, so if you default, they'll sell it. Well, in that paperwork, the DOT, deed of trust, the banks put this clause in there that says that if the home seller, which is whoever the home seller is, if they ever sold their property or if they ever conveyed their property to someone else, okay, like anybody, and they don't cash out the underlying note or the underlying mortgage or the underlying loan, all the same things, then the bank has the option to accelerate the note and foreclose on the property. And basically what that means is that if and maybe if the bank decides to foreclose on you because they have the right, because the seller have sold their property. That's all that means. But how often does that happen? With me, it hasn't happened, thank God. I own a lot of rental properties, but the risk is there. So let me repeat this because I don't think I explained it really good. All right. There is a DOT, due on sell clause, that says that if the borrower / seller sells this home or conveys this home to somebody else, that the bank has the right, doesn't mean they're going to, they have the right to accelerate the borrower's note and give them 30 days and sell the property. Okay? Now, the risk of this is so small in my mind. Okay, I'm not an attorney. I just do it in my business, but it's so small that it outweighs it because banks are in the business of collecting payments. They don't want to own properties, and if for example, if the seller is behind in their payments 3 months and they owe the bank $5,000, and all of a sudden you say, "Hey, Mr. Bank, here's $5,000 I was behind, and I'm ready to make the monthly payments of $1,000 a month," and you start making the payments every month on time, why did the bank care? Okay, the bank is so fucking big. Like for example, the people you call from, let's say, Bank of America or Wells Fargo, they're just service providers. They're not even the guys that own the notes. If somebody else owns them, they're just like the middleman, just providing support or taking the checks and depositing into the correct banking account. So they don't give a fuck. Banks want to just performing notes. And so, in my opinion, and that's why I put my money and my risk in here, because I think it's very, very slim. I have so much higher chance of getting in my car and getting in a wreck than the bank calling the note, guys. Okay. But I want to let you guys know that risk is out there. Okay. There's different techniques that you guys could use to shield yourself from the bank finding out. And I have YouTube videos, or you can just join the dojo, and I'd be happy to help you guys out how to structure one of these transactions, guys. Okay. Now, besides the due on sell, I'm thinking about if there's any other negative. I mean, one hiccup that I had was that I bought a house from a motivated seller. I rented it out for like 6-7 years, maybe a little longer, and then seller situation changed, and then they called me, and they keep calling me like, "Please sell the house, etc." So that can happen. So but one of the great things with buying property subject to is that even if you have bad credit, you have the deed in your name. Let's say 12 months, 24 months. I like to say 18 to 24 months. It's so easy for you to go refinance and put the loan under your name. I don't recommend that. I recommend that let the old seller carry the note. That's what I do. But let's say you live in this home, you love this home, the seller came to you, you have already lived in there for 6-7 years, you already built a lot of fucking equity. It's so easy to refinance and put it in your name, guys. Okay. So it's no big deal. There's different things you could do if the bank called note. I have videos on my YouTube channel. So I just want to let you know the risk is there, but it's so fucking small. Like the risk of getting a loan from a bank, signing your name up for it. If you default, they're gonna hurt your credit. They're gonna take the property. Dude, that's more of a risk than with this, where if something happens, it's just take your fucking house, but not your credit. But if they decide to take your house, you have so many exit strategies. Like I mentioned, one of them, refinance, to get out of that situation, guys. Okay, so it's just so small, but I want to take the time to put it out there. Now, this strategy, buying houses subject to, if you go to an average attorney or if you go to an average realtor, they're not going to know about this, and this is why I was shocked. This is why I take this time on Friday or Saturday. I lost track. I've been working all day to to make this video for you because, before I got into the real estate business, and I got a video on how I got into the real estate business where, I had a lot of money. It was right at the crash. Nobody wanted to lend me some money to buy a house. And that's why I got to this. I didn't think this should happen. I didn't think I could buy a house like somebody's payment. I've never heard about it. The realtors never told me. Nobody told me. None of my family members, none of my cousins, uncles, they ever bought anything like that. So I was like, whatever, man. I couldn't believe it. But, I started researching it. I paid for books, paid for seminars, and I was like, wow, but I don't know if this works. I took action. I found my first deal. My first deal that I bought was a house for me, and I moved in. And so, thanks for one of my mentor students. He hit me up and says, "Hey, Mike, can I buy houses for myself to live in?" And that's why I even thought about, wow, I haven't made any general videos to explain to people how they can even buy a house like this for their own self. So thanks, Alex, for hitting me up, dude, and helping me make a video for the whole community. So if you want to buy a house, I think the risk factor is so much less than buying a house subject to than it is going getting a loan, guys, and paying all the fucking fees and letting them jumping through hoops and begging them for money, and then they could ruin your social, they could ruin your credit, they could take their property. Okay. All right. Now, now we talked about what is it subject to. We talked about the benefits of buying houses subject to. We talked about what is a motivated seller. We talked about the cons of a subject to. Now, let's talk about, is this legal? Because a lot of people ask me, hey Mike, is this legal? Is this legal? So I basically made a video on YouTube that talks about exactly if this is legal. And I have a piece of paperwork, I don't have it in front of me right now. This is called a HUD-1. And basically a HUD-1 is basically a piece of paperwork that all realtors, all closing companies all use, which is mandatory basically by the government in a sense. It's a different department than the government, but they control all that. And on a HUD-1, I don't have it in front of me, but if you go to my YouTube channel, it shows on there, I don't remember the line right now on top of my head, but it's I think 138 or 213 or some one of these things. And it says buying property subject to. And, so it's on that paperwork. So that's the evidence. The other evidence is I bought properties like this and I sold them. I closed them at the title company. That new buyer got a loan from Bank of America. They all paid me. Everything went out smoothly. So, if it wasn't legal, they wouldn't allow it. When I went to my title company to close one deal, my license was expired and they wouldn't allow the deal to close, so I wanted to renew my license. So what I'm saying is, these title companies, they're fucking jerks, dude. They're gonna comb through everything, make sure it's 100% legit. They don't want to do a deal if it's not. So if it wasn't legal, these guys wouldn't do it. I'm telling you, my license was expired and they wouldn't fucking close the deal. I'm all happy, I'm all dressed up, and I had to go, I was in Plano, I had to go all the way around to the fucking license plate, get this, before I could even close the deal, dude. Everybody was waiting on me because my license was expired, guys. So title companies are not no jokes. They're not gonna just do something illegal. And so if buying houses was subject to was illegal, they wouldn't close deals at title companies, guys. You could not only close it when you sell to a retail buyer, if you're an investor, or if it's yourself, you go there and you want to close, they'll close those deals for you because they're not legal. They're going to give you a bunch of paperwork that says, look, here's some of the disclaimer, do one sell that we talked about, etc. Okay? All right, so if you want more information, if it's legal, get back into my YouTube channel, My Real Estate Dojo at YouTube, or my website at myrealestatedojo.com. I have a video specifically talks about that. Now, I want to let you guys know, again, I've said that before, I'm not an investor, I'm not a CPA, I'm not an attorney, I just use the strategies for myself. Like my first house I bought as a subject to, that's what the whole idea, let me do this because this is a great way, and the market had crashed, it was 2007 fourth quarter, and so this is how I got into the game, and now I'm passing that information to you. Do your own due diligence and see if this works for you. I bought my first house subject to. I'm never gonna buy a house via loan unless it's maybe my dream home, it's a little cabin or something like that. But again, I don't like borrowing money, and this is a great way. Okay. One other thing is that I forgot to mention is in the benefits is, for example, when you buy a house subject to, when you run your credit, that debt is not linked to you. That debt is not associated to you. So what that means is your debt to income ratio is still looking really good. You don't have no debt associated to you. That original seller does, which is very, 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 very powerful, guys. And that's why I like it. Plus the non-recourse loan, okay? All right, 1 second, guys. Excuse me, I don't ever do these really, really long videos like the seminar, guys, but I know this was such an important video. I wanted to make sure I kind of included everything. Now, how do you find these motivated sellers? How do you find these deals, guys? Because they're fucking out there, okay? Now, if you get on my YouTube channel, I have 2 videos, okay? One is called 42 Ways to Find Free or Almost Free Motivated Sellers. And in this video, I tell you 42 ways to do nothing, not spend any money or very small amount of money, just resources you have like Craigslist, like your phone, like text messaging, so Facebook, so many different ways to find sellers solely for free, okay? And for you guys that want to do it faster, you don't want to do all that stuff, then I have another video called 38 Ways to Find Motivated Sellers. And this way, you know, it's what we call systems, where you spend money and the leads start coming in, okay? So go to my YouTube channel, watch one of these 2 videos, but more than likely, if you don't have any money or you don't want to spend a lot of money, use the 42 ways. But remember, if you don't put money in, you got to put sweat equity in. What is sweat equity? Your time, dude, okay? Now, I'm going to explain what you could do if you want to buy a deal like this without spending the time. But if you want to spend the time, it'll save you a lot of money, okay? Now that I talked about how to find motivated sellers, get on my YouTube channel, watch those videos, okay? I want to talk to you about, okay, so you've done your due diligence, you decided, hey, you know, this is something that I want to do. It's, hey, I have good credit, I want to buy a house, I can go traditionally, or I want to try this new idea Mike talks about. Or you're the type of person that says, look, I want to buy a house, I don't have good credit, but I still want to own a home. I'm making monthly payments on my rent. You know, I'm making $1,500 for a 3-bedroom apartment. I know I could get a house at the same exact payments, but I don't have the credit, okay? So if any of these people, and anything between, you can do a subject to. And there's basically 2 ways to do this. To go out there and find a deal and take the next step, basically, okay? Step 1 is you're gonna have to learn some new skills, okay? You're gonna have to learn a little sales, a little negotiation, a little marketing, or a lot of marketing, generate leads. And you're gonna have to go out there and generate leads, talk to motivated sellers, and put the deal on contract, negotiate a subject to. Now, the benefit of that is that you don't have to pay all that junk fees like we talked about. You don't have to pay all the realtor fees. You don't have to spend all that time. It's not going to be on your credit. I mean, so much benefits. There's a non-recourse loan. But on the other hand, you're going to have to put a lot of fucking work in. Okay, you're going to have to put some work in to learn some new skills. And so you can't have it and eat it too. You know, like they say in America, you can't have the pie and eat it too. It's like you can't have 2 things. So, you got to decide that, hey, I'm going to put the work in to give me a motivated seller. But if you had $20,000, if you had 20% to put down, instead of putting 20 grand to buy it traditionally, you may only spend 2 grand, 3 grand, and then to buy this house, the same exact house, the same $200,000 house. Okay, guys. As you can see, you save a lot of money, but if you're saving money, now you got to put in work. The other way is that if you're really busy, you don't want to do all this, you don't want to learn new stuff, you don't want to talk to sellers, you could buy deals from what's called wholesalers. And wholesalers are individuals that are out there advertising, finding deals, put it under contract, and they want to sell it to an investor. And in return, that investor is going to pay this wholesale some finder's fee, okay? And they usually pay, you know, anywhere from like 2 or 3 grand, 5 grand, depends on the deal, okay? So your option is do all the work yourself, or pay 2, 3, 5, whatever it is, depends on your house. If you're buying a $500,000 home, then you're gonna pay more than that. If you're buying a $150,000 home, you're just probably gonna pay like 3 grand, okay? And pay a wholesaler to go out there and find you the deal, let them negotiate, put everything on the contract. Then you just pay in the 3 grand. You take the 3 grand, his contract, whatever he's negotiated as a non-recourse loan, take that, put it at the title company. They do everything for you. Then they pay the wholesaler. They do everything. You sign. The seller comes. You become the rightful owner of it. Okay. So that's number 2 way where you don't have to do any work. Let's say you have a full-time job, you have a family, you don't want to learn other stuff. Well, then fuck it. Instead of getting a loan and dressing up, going to the bank, begging that motherfucker, getting in the car, dealing with the realtor, you just let this guy do all the work, and you just pay him such a small fee, and then he does all the negotiating, all the marketing, etc. But you're gonna have to pay a couple of grand. But again, you're saving so much money. You're getting into the amortization ahead instead of that guy. That old seller paid all the junk fees, paid all the interest because of the amortization. It's his own fucking credit. So this is such an amazing way that I can't emphasize it. I'm just tired. I don't have the energy to express it like I normally do. Excuse me. Kind of losing my voice. So if you're a homeowner and you want to buy a house, there's 2 ways to do it. You can learn the skills, or you can pay a wholesaler, guys. Now, for the people, girls or guys that don't have good credit, and then there's a third way. The third way is when you go on, for example, on Craigslist. There's people that says, owner financing, 20 grand down, $1,000 a month, or 10 grand down, $1,000 a month. And what these people are is basically investors that had bought the deals from those wholesalers. So let's say that wholesaler sold the property to this investor for $3,000 assignment fee or a finder's fee, to make it simple. And then this wholesaler sold it to this investor for $3,000 assignment fee or finder's fee, to make it simple. And then this investor went and put it on Craigslist, and he says $10,000 down, $1,000 a month. So what happens is, option 3 is you get on Craigslist, you find this investor, and then you pay this investor 10 grand. Or this investor only paid 3 grand and $1,000 a month. And usually this investor, what he does is he does what's called the wrap. He creates a new note, and his payments to this wholesaler that originally negotiated to the seller was $1,000. Now this investor is saying, hey, on Craigslist, 10 grand down, $1,200 a month. So what happens is your option 3 is, if you don't want to do your due diligence and go find your deal number 2, if you don't want to pay a wholesaler, then you can just do easy, get on Craigslist, find that investor. He's done all the stuff, and then you just buy from this investor, and you give him 10 grand and $1,200, and so he makes 10 grand instantly, and he gets $200 a month every month for the remaining 30 years or whatever the loan is. Okay, because what he's going to do is, if the underlying note that he got from the wholesaler, that the wholesaler got from the seller was 5%, he's going to turn around and do a wrap and give it to you at 8% or 9%. Okay, so simply put, if you're ready to do something like that, you have 3 ways. I don't recommend number 3 because you're just a retail buyer now. You're like the herd, but even worse. Okay, number 2, buying it from a wholesale is a great idea. If you guys are looking for wholesale properties, please leave a comment. I have a lot of students, they go do deals and they sell it to wholesalers, or get on my wholesaling list. Okay, if you type in Google Mr. Investor wholesaling list or wholesaling, I'm sure it's going to come up, or just look below, guys. Okay, or just leave a comment and I'll send you the link, so no big deal. You get on my list or you get on my students list. And their wholesaling deals are learning about the business, and some of them are pros, some of them are new, but whatever it is, they'll do all the work and you can just pay them. Okay, or you can use some other wholesaler out there, guys. It doesn't matter to me. I just want to give you some free information. All right, so 1 second. Now, let me just summarize everything up for you, because I know it's a lot of information, and it just feels like for me because I'm doing a whole lot of fucking talking. All right, so if you're a if you're a home buyer, you're a first-time home buyer, you're an experienced home buyer, there's other ways to buy property besides getting a loan. There's other ways besides hanging yourself with the bankers. There's other ways besides using your own Social Security. You could use what's called subject to. Another way to put it is what's called using other people's money. Another way to put it is what's called creative financing. They're all the same thing, guys. And one strategy, there's like 7 different types of owner financing strategies that I know that I teach on my YouTube. But one strategy that I'm teaching right now is called Subject to, guys. If you want to learn about the other, get on my YouTube channel. But this strategy is called Subject to. And in this strategy, what you do is, you just simply step into the seller's shoes and you take over the seller's monthly payments. You don't have to get a loan. You don't have to pay all the junk fees, all the closing fees, and you definitely don't have to put that much money down that you normally do when you buy traditionally. And the good news is that debt is not under your Social Security, so it doesn't hurt your debt to income ratio. Your credit is superb, and it's a great way to buy rental properties, personal properties, investment properties, fix and flips, so many different ways, guys. It doesn't matter for your kids, future, whatever you want to do, okay? And so using a technique called Subject to, you could do that, okay? For your own personal home or whatever. And we talked about where to go find these people on my YouTube channel, the 42 ways, and I told you exactly what to do, how to advertise totally for free. We talked about the benefits of this, buying property subject to. We talked about a couple of cons, and we talked about what should be your next step if you want to buy a property like this. You go learn all the skills required, which is not that hard, guys. It may take you a couple of months. If you come from a background of sales, then it's very quick. You just have to learn the terminology of real estate. If you've never done sales and you're like a geek or you're a back-end worker, then it may be a little challenging, but I have faith in you. I believe in you. You can do it. And why not? When I started, dude, guys, I didn't know shit, man. I'm a refugee to America. We come here with no money. We didn't speak the language. We didn't know anybody. Didn't have no credit. So if a guy like me that can't spell, can't write, shit, dude, if I can do it, dude, godly, you guys can do it, man. I'm sure you have more connections. I'm sure you have friends and family that may have properties like this that you don't even worry about because you're not looking for it. But now that you watch my video, you go out there and do it, guys, okay? So we talked about all the benefits of buying subject to, even for your own personal home, guys. Now, it's normal to have your guards up. It's normal to say, hey, is this even real? You be the judge of it. Just do your own due diligence, guys. There's a lot of information out there, okay? I'll give you raw information, totally free. This is exactly what I use in my business. I'm not telling you should do this. I'm not telling you shouldn't do this. But I'm saying, hey, I found this gold underneath this place that nobody looks at, and I want to bring it to you guys saying, hey, if you're an out-of-the-box thinker, you don't want to travel the normal path, you may want to look into this. You might want to do your own due diligence because I was the same way. I did, and now I'm very happy. I'm doing deals. I'm buying houses without using my own credit. I'm making money off these deals when I sell them. So it works. And if you're just looking to buy your own personal home, I highly recommend it. Fuck a bank. Somebody else already went for that trap. You just take over their payments. And if you're looking for an investment property, then hallelujah, dude. And there's only one thing I just talked about, which is subject to. There's 7 other techniques of owner financing. You just have to get on my YouTube channel, guys. If you have any questions, hey, leave a comment, guys. I'm always on YouTube and I'm always on Facebook. I'm here to help you guys reach your goals, whatever they are, guys. Guys, if you really enjoyed this video, please do me a favor. Tell your friends and family about me, guys. Please like, please share, please comment. It really, really motivates me. And I do this for free. I do this out of love and just pumps me up, which allows me to make these videos even when I'm really, really tired after I had a long day on a Saturday, Memorial Weekend when everybody's having fun. But I'm here grinding it out because this is my passion. I really want to do it, guys. Now, go out there and hustle and bustle. Fuck a naysayer, dude. Everybody's not going to believe in you, dude. Your mom may not believe in you. Your cousin may not believe in you. Your husband, your wife, your brother, your sister. It doesn't matter, guys. If the idea came into your mind, guys, or if you're watching this, it's because it's fate. Now it's your job to take that omen, take that opportunity and seize it, dude. Don't just think about it. And if you think this is something you're interested in, start researching it, dude. Don't just wait around and watch the next video. Go out there and research and see if what Mike's saying is true. And if it is, then take action. Go out there and get yourself a home, guys. Go out there and hustle and bustle. Don't take no for an answer. This is Mike with my Real Estate Dojo. See you later, gang.